What is up? This is the Working Investor. In this video, we're going to talk about two of Kurv's products, KQQQ, as well as KGLD. And we'll see that they're not just throwing curveballs, they're actually hitting home runs over here. And they're leading in the pack when it comes to total returns compared to competitors out. And we are going to look at the inner working of the secret sauce of these funds that I've learned from looking at their holdings, prospectus, and most importantly, watching the interview. As always, nothing here is financial, tax, legal, or baseball advice, or any sort of advice. This is purely for fun and entertainment purposes only. Let's get into the video. Let's talk about what I've learned with KQQQ and why I've built up a position in this fund. This has been around for over a year now. It launched July 22nd, 2024. Currently has a net expense ratio of 99 basis points and pays out monthly with a ranging distribution, currently advertising 18.82%, but they fluctuate between 9 and 14% that I heard from Howard. And from the website, they talk about that they remove the non-pure tech companies from the NASDAQ 100, so to say, for example. They remove non-tech companies. And the secret sauce is in how they manage their exposure, that they sometimes increase and decrease their exposure. These are the notes that I've gotten from his interview with Income Architect a while back. So he talks about risk on versus risk off environments. So Howard said that basically what I understood is when there's a risk on environment, he wants to magnify the upside via outweighing price momentum. And he doesn't just write willy-nilly calls to generate income on the entire portfolio. He's very selective in what he writes calls on. So he'll write calls on, say, funds that are in the tech sector that are kind of trading sideways at the moment. They're having a sideways moment. Hence, he doesn't try to fully cap the upside. And when there's a risk-off environment, that's when implied volatility is increased. So then he'll write more calls to kind of hedge your downside, to give you a total return that can buffer the downside via the dividends. So he mentions in the interview the strategy is to magnify upside when the risk is on and mitigate losses when risk is off. And if you look at the KQQ prospectus they have listed on their website, you could see an entire array of different option strategies that they're allowed to do. They could do your classical cover call writing, but they can also do uncovered calls or uncovered puts, I suppose. They can also do call or put spread. So they have all these different strategies they could do. They could do protective callers, which is sell call buy put. They could just do protective puts, and we're going to look into that right now. And they could do call purchases to get extra exposure, which he does in some of the funds. He states that the SEC has not approved nor disapproved these securities or passed upon the adequacy of this prospectus. So I don't want to misrepresent this prospectus or anything like that. So looking at the holdings of KQQQ currently, you'll notice I highlighted in green, it appears that they have protective puts on ticker symbol MAGS, which is the Magnificent 7. And this expires December 19, 2025. He even staggered the protective puts between the 65 put and the 60 put. And you can see right now that MAGS is trading at $64.64 according to stockanalysis.com. So you can see that 65 put is already in the money. And any further downside from here in the Magnificent 7, which I would imagine represents a big chunk of the portfolio that he has, or it would be correlated to the Magnificent 7 to an extent, would protect the downside, at least in some capacity. Looking year over year of KQQQ versus the QQQ as the benchmark versus QQQI, from NEOS versus GPIQ from Goldman Sachs versus QDTE from Roundhill, you could see that right now KQQQ is the winner of the pack. It's outperforming the Qs It's outperforming GPIQ, it's outperforming QDTE. But remember that KQQQ does a selection, doesn't just do everything that's in the queues. It has its own, small selection of it. Also remember, what's unique with KQQQ is it has the ability to put in protective puts to protect the downside, and it does at this point in time appear to do so. So if the market took a real sharp decline, KQQQ will have some level of dampening in the decline compared to the other fund. This reminds me a lot of the Nest Yield, which I made a video on recently, that also has protective puts. So I'll just go ahead and put in EGGY and EGGS. And we're just going to go year to date because those came out close to the end of last year. And you can see here that, KQQQ from year to date is somewhere, in the middle-ish of the pack. But you can see that EGGY and EGGS are definitely also a force to be reckoned with. But I still think that KQQQ has strength and merit. And I really like fund managers that think of both types of market cycles. They try their best to get the best performance on the upside and also try to dampen the downside, not just a one-dimensional type of strategy. It's a strategy that is evolving with the market. It's a living, breathing strategy. Let's go ahead and evaluate again KGLD. I've made several videos on KGLD comparing this to other gold income funds. This is a follow-up of sorts, but also have new information that I've received from the interview, and I want to shed light to my audience. So KGLD from Kurv is not your typical cover call ETF type of fund. I really love the brazenness that it has right in the prospectus of trying to put in the first line, KGLD seeks to outperform price return of gold, which I love. This fund came out the 8th of July, 2025. It has an expense ratio of, I guess, about 1% or 99 basis points, about 1%. Let's say it pays monthly. It looks like around 13% pay, distribution, but I look at total returns as the number one benchmark. I will link this video that Brad, Income Architect, had with Howard about these funds, and I actually put some notes about during the interview. So do you remember when it said that it's trying to outperform the underlying of gold? So Howard explains, if I understood correctly, and you guys can watch the interview yourself, is that he has additional long exposure to gold, and he talks about the silver fund as well. And then he talks about, very importantly, dynamic leverage. So by having additional long exposure, I guess through synthetic long, when gold is trending up, you can capture more of the upside. And I believe he mentions in the interview that when gold is trending down, he could reduce some of that leverage, and this way not get such a magnified downside. And then he talks about putting on the straddle strategy you could do for KGLD and KSLV. And you can see, since this fund launched July 8th, 2025, you could see that KGLD almost captured the entire momentum of gold. So I guess it didn't outperform gold at this point perfectly, but it still has a lot of time to catch up. But if you look at the comparison of KGLD to IAUI, this is a NEOS product that does cover calls on gold, you could see that it's blowing this out of the water. And like I always say, a cover call strategy in my books, a good cover call strategy would capture, let's say, 75 to 80% of the total return of the underlier. That's, in my books, a great cover call strategy. So if something is about 20% upside in a certain period of time, if it captured about 15%, I would consider that a great win as a cover call strategy. So this thing almost captured, it captured like 90% or so of the upside. So I think that's incredible. And it's like blowing the competition out of the water. But again, we've only had a one-sided market. We've only had an up market with gold. We got to see a down market and a sideways market and continue trending these two funds of KGLD versus IAUI. But for now, it's performing pretty much like almost like what it said. I mean, just said it's going to outperform, but I see the potential. There were times where I think it did outperform. And let me know what you guys think about these two funds in particular, the KGLD fund from Kurv and the KQQQ fund from Kurv. Does this have a place in your portfolio? What do you like about it? What do you dislike about it? Let me know in the comments. This is the Working Investor over and out. I hope you guys have a wonderful trading week. Be well.